Well, volatility in the commodity markets has taken its toll on the balance sheet of commodity trading specialist Brady. Full year numbers reveal a loss before tax of £1.4 million after revenue fell 12%. But will the future be rosier after the implementation of lean management, new concentrate systems, shrewd acquisitions and take-up of the company's cloud offering? Gavin Lavelle is the Chief Executive and he joins us now. So Gavin, as a reminder, you supply trading and risk management solutions for metals, recycling, energy and soft commodities. So therefore, are you a hostage to the fortune of commodity prices in terms of prospects and sort of clients delaying orders?
The commodity markets have been extraordinarily volatile, particularly in the second half of the year, where the combined index fell by something like 25% in a 6-month period. So this is extreme volatility in the commodity market, and that's off the back of a very long-term decline in prices. So it was difficult trading conditions. I'm delighted that we managed to secure new contracts in that environment, and it's right to say that we lost money, but we did take corrective action in Q4. We took over £2 million worth of cost out of the business. We'll see the benefit of that coming through in the first half of this year. And whilst it's difficult to call the turn in the commodity markets, our cost base is lower. We're being prudent, we're de-risking the business, and I think our strategy of providing cloud software, which allows our customers to have a lower cost of implementation for their risk management tools, is clearly reaping benefits.
So it's all about you adapting to the environment in which you work. But what about your clients? How are they coping with the market volatility, or are they adapting in tandem with you?
So the customers, depends where you are on the commodity cycle. So if you are a producer, lower commodity prices are clearly a very difficult environment. If you're a trading company, typically traders like volatility because they can make differences in arbitrage. And if you're a consumer of commodities, an industrial company, then the lower input prices is clearly a benefit. So in this environment of lower commodity prices, we're focusing on the industrial companies. The trading environment was particularly tricky last year. The market seemed to have normalized in the first quarter of this year. So I think we're getting back to more normal market environments. So I expect to see the traders start to improve. I expect to see the industrial companies benefit from substantially lower commodity prices, and those are the areas of focus for us going forward.
Let me take you back a couple of months. January 2016, those first 3 weeks of trading in the new year, did you literally have your head in your hands thinking, oh my goodness, when you looked at the performance of the Asian markets, China in particular, and you were looking at the price of oil hovering at about $20 a barrel?
We'd already taken over £2 million worth of cost out of the business. For Brady, we have a very high recurring revenue. So something like 55% of my revenue is already booked for this year. On top of that, we have ongoing service revenue. And then the last piece is the license element. So we have we have no leverage on the balance sheet. There's no debt. We've taken cost out. We will be cash generative this year. And I think a lot of the headlines you're seeing about commodity companies are sharp declines with people who have highly leveraged and highly geared balance sheets. That's not true for Brady. We have a lower cost base, high recurring revenues, 400 customers, and I'm very confident the action that we took last year, we'll see the benefits coming through and improve profitability in the first half of this year.
So not one single grey hair appeared on your head in January 2016. But you did say to me that you managed to get 2 major contracts. How did you manage to secure them in this environment? I mean, did you have to reduce costs at all? Discounts? What was the sweeteners and incentives?
Well, I think customers are looking to those customers are looking to save costs, are looking at improving efficiency in their business and having good systems to control their operations and critically to manage their risk. With our software, you can manage the trade life cycle from the initial trade entry all the way through to the settlement, accounting and risk management. And increasingly, particularly in the trading environment, banks are being discerning when they're lending finance. And when they look at companies, they want to ensure they've got good control on their business and good risk management. And for Brady, our customers can manage their whole business life cycle using our solutions. And I think we had 4 really good deals at the end of last year, cloud-based, in our environment, which means we could install very quickly, and the customers could show to their banks they had very clear control and risk management of their exposure, and that's very important for our customers.
Okay, talk to me about your recent acquisitions, because there is the stock question, which is, were your acquisitions immediately cash generative or earnings enhancing, or did you see potential in the purchases you made?
I think we serve a very large market. It's about a $1.6 billion spend for trading and risk management software. No software company has more than 20% of that market. So food, energy, metal and recycling is a tremendously important marketplace, and we think there's an opportunity to further consolidate in this space. Given the difficult trading conditions, I think there's going to be some distressed sellers of software businesses. This is an opportunity for Brady to acquire, and I think last year we bought 2 relatively small businesses at very attractive prices, which add to our portfolio, strengthen our customer base, and are earnings enhancing for Brady. So I think that's a perfect opportunity for us to make hay in this market.
So I can see from today's numbers that you do have just over £6.5 million in the bank. Are you going to be deploying that towards your consolidation strategy?
So we will continue to be prudent. We will be cash generative this year. Our business model overall is to generate cash and then acquire. But given the uncertainty in the market, we will be prudent this year. We'll ensure that our balance sheet is absolutely rock solid. As we continue to generate cash, strengthen our balance sheet, we will look into the market and see if there's any opportunities. But we're going to be prudent for the first half of the year.
Okay, so you've mentioned prudence twice there,
Yes.
prudent twice, and uncertainty. But in the long term, over the long term, are you still confident about your business?
I think the commodity provides a fantastic environment. The world's population, according to the World Bank, will increase from 7 billion to 10 billion by 2050. That's an enormous growth in population. There's going to be natural demand for resources and contention for resources. And I think in our software space, nobody has more than 20% market share. I think that creates a fantastic opportunity for Brady and for our shareholders.
Okay, you mentioned 2050 there, so you are thinking long term. But in terms of today's loss, it is a loss. It's a small loss, but it's still a loss. Are you having any problems with shareholders that are calling for you to be ousted?
Well, I think when the share price is down, there's understandably our investors have expressed concern, but across the board, our major shareholders have been buying shares in the second half of last year. I indeed also bought shares in the second half of the year, and I think that shows great confidence in our ability going forward. So yes, I'm disappointed the share price is down. We've been very clear on the action that we're taking to correct that, and we're looking forward to enhanced performance in 2016 and beyond.
Okay, in terms of that enhanced performance, final question, where will the growth come from?
Yeah, so I believe our cloud offering, where we can provide software in our cloud environment across all the different asset classes, is a compelling story. In fact, we only started the cloud delivery about 3 years ago. Last year, nearly 50% of our deals were cloud deployed. This is being very competitive for us. We're taking increased market share, and I'm confident going forward that we will continue to grow.
Gavin Lavelle, Chief Executive of Brady, thank you very much indeed for joining us today.
Sarah, thank you for your time. Thank you.